I'm going to go through some of the multiple choice questions from various papers now, starting with paper 1. This is the specimen material that was released back in 2018. The reason I'm going to look at the multiple choice questions, people often overlook them. A couple of reasons why I think it's useful to go through them. One is that they are often really underestimated, particularly as a revision aid, because what they do is throw up all kinds of random topics that you may have forgotten about. But the other problem with them is that the mark scheme doesn't explain how the answer has been arrived at. So people often think, perhaps from their GCSE studies, that multiple choice questions are going to be really easy, that there's going to be a couple of really obvious, stupid answers that it could never possibly be. But let's just get rid of that myth straight away, because that is definitely not the case. It may seem blindingly obvious, but please read the instructions. So the correct method is for each of these answers to choose the one that you think is correct and colour it in. Wrong methods here, putting a cross in the box, putting a tick in the box, putting a tiny little dot in there to make it look like an eye. And also, I don't know whoever has done this, but you can't see this one very clearly, but a series of 3 wavy lines. I don't know, presumably somebody did that once in an exam. So don't do any of those, just colour them in. If you want to change your answer, cross out the wrong one and then redo the correct one. And if you want to return to that one at any point, then put a circle around it. So you'd have the original colouring in, the cross where you thought it was wrong, and then the circle to reinstate the correct answer. Now, I think once you've done 3 possible options, probably give up and move on to the next question if you still think it's wrong at that point. Okay, so just going to go through them now. There's only 10 in each paper, but it's 10 marks. If you're well prepared, it should be 10 relatively straightforward marks. So this one then, the owner of a restaurant purchased some equipment on credit for business use, but returned the equipment to the supplier as it was damaged. How should the return of the equipment be recorded in the books of the restaurant? We've got a choice here of the books of prime entry. It can never be the purchase returns journal, because this isn't purchases, this is equipment that has been purchased. So it has to go through the general journal. When we bought the equipment, we would have debited equipment, credited the supplier. When we're returning it though, we are going to be debiting the supplier to reduce the amount we owe them and crediting the equipment account. Okay. Second question then, a bookkeeper recorded a payment for vehicle repairs in the vehicle's account. Well, that's clearly an error of principle where something's gone to completely the wrong area. An expense has been confused with an asset. So which of the following correctly describes the type of error? So that's an error of principle, so it can only be one of these two. So at the moment, they've put the debit to the vehicle's account, so we need to credit the vehicle's account and debit the vehicle repairs. So the answer there is going to be C. I'll colour that one in. Okay, on to question 3. A sole trader has not maintained proper books of account. The following information is available relating to trade receivables for the year ended 30th of June 2016. So this is a bit of an incomplete records type question. We're trying to find the missing figure for credit sales. So we could do that in a T account. We could do like a little mini sales ledger control account. So we'd have the balance brought down. If this was a sales ledger control account, the balance brought down would be on the debit side, £14,000. The sales figure, which we don't know, will be that missing figure. The balance carried down is going to be on the credit side, and the trade receivables, the amounts that we've received from the trade receivables, we would debit the bank and credit this sales ledger control account. And sales returns, I'll just put SR there, I've got enough room, £7,000 also on the credit side, because it reduces the amount that the customers owe. So apologies for the scrappiness of the writing here, but 14,000 minus 205 minus 7 minus 12 means that on the debit side we're going to have sales of £210,000. So the answer there is going to be C. Okay. Question 4, this is about a capital account for a sole trader. So the following information has been provided, and what we're trying to do is work out whether the business has made a profit or a loss. So if you remember your capital account, you've got the opening balance at the start of the year. So in this case, it's 32,000, and you have the the closing balance at the end of the year, in this case 29,000. So it's actually gone down by £3,000. Now remember that the profit will be added and the drawings will be deducted. So if our drawings were 11,000, that means our profit is £3,000 less than the drawings. So we're actually looking here for a profit of £8,000. Now, another way we could do this is to create a mini capital account. So this is the bit that's at the bottom of the statement of financial position. So we could start with the £32,000 opening balance. The profit is a mystery figure. We don't know what that is at the moment, but we do know drawings. They're £11,000 and they reduce the capital balance. And we do know the closing balance is 29,000. So the way to do this is to work backwards. So start with the 29, add the 11 minus the 32, and you will get a profit there of £8,000. Okay. Over to question 5. So a sole trader received an order from a credit customer on the last day of the financial year. And that's as it should be. So this is the realisation concept. So we record transactions as and when they happen. So not when the order's placed, but when the actual sale has taken place. Okay, so question 6. This one is about items that are to be shown in a partnership appropriation account. Remember, this is the bit that's at the bottom, of a partnership income statement. So it definitely wouldn't have drawings in it. Drawings are going to go into the current account. The appropriation account shows how the profit has been shared. So there would be interest charged on drawings, so that's okay. There would be interest on capital, partnership salaries, share of profit or loss, and that will be it. So drawings themselves do not go in the partnership appropriation account. Interest on drawings do, but interest on a partner's loan does not. So if a partner has loaned the partnership money, then any interest that's due to that partner would be treated as a normal trading expense. So that would come out of the profit before we start appropriating it. But shares of residual loss, yes, that would be okay. So it can't be A, can't be B. Let's look at C. Interest on capital, yes, that's okay. Interest on drawings is okay. And partnership salaries, yes, that's okay. So I'm going to be brave here and colour in C. Let's just rule out D though. Interest on partner's loan, if you remember, that doesn't form part of the appropriation account. That's an expense in the income statement. The partnership salaries and share of residual profits would be okay. So the answer is definitely C. Right, Yasmin is a partner in a recently established business. Errors were made in completing her current account. So this is the current account. So once we've done the appropriation, we make transfers over to each partner's current account, assuming that they run them. Some partnerships, remember, just use capital accounts. Everything gets thrown in there. But the majority of partnerships will use separate current and capital accounts. So on the debit side, we should have the drawings, that's fine. But anything that's an appropriation of profit, so salary, interest on capital, that's fine. So the salary should actually be over there on the credit side. Let's squash that in over there. Let's get rid of that. The share of loss should be on the debit side. So let's pop that in over there, 3,300. And then we can work out a new balance carried down. So we should have, I think it probably would have been easier if I'd have started this again, but we've got 12,000 and 3,300 on the debit side. So 15,300 there. And then on the credit side, we've got the £8,000 salary. We've got the £8,200 interest on capital. And we haven't got the share of loss. So we've actually got 16,200 on there. So the balance carried down, 16,200 minus 15,300 is actually £900. So I brought down, it's going to be £900 on the credit side. So remember, it's not which side it's on when you carry it down. So it would be BAL CD of 900 there. It's which side it comes down on at the start of the next financial year. So the answer is actually A. It's a credit balance of 900. Question 8, the following information is available about rent received. So remember, this is an income account. So we've got a debit balance brought down. Let's draw up a T account this time. So debit balance brought down of £550. This is rent received. Just to remind ourselves, it's an income account. Receipts during the year, so we'd have debited the bank, credited the rent received account with 9,380. And there's a credit balance carried down at the 31st of March 2016. So be careful with that one, because remember, the carried down balance is going to need to go on the debit side because it's which side it's brought down. So it's a credit balance, it's brought down at the start of the new financial year. Now the missing figure is the figure to the income statement, which is what we're being asked to show. So we've received 9,380. We've got 550 brought forward on the debit side and 420 carried down. So the difference, the figure going off to the income statement, is 8,410. The answer is A. Okay. Apologies for the scribbly nature of my workings here, but to be honest, we've only got a minute and a half per question, so we do need to be pretty speedy with our answers. Number 9, a retailer has never kept accounting records but wishes to know the value of the business. Which statement would provide the retailer with the value of the business? So that's going to be a statement of financial position, quite straightforward. Right, last question then on this section. An extract from a limited company statement of financial position is shown below. Authorised share capital, ordinary shares of 50p each. We've got £450,000 worth. So authorised, remember that is the maximum number that the company can issue. So actually for our workings, that's not going to be very much help. It's the issued share capital. So that's the number of shares that have actually been issued. We've got £300,000 worth, okay, but they're 50p each. So if we times it by 2, because we can buy 2 to the pound, that means we've got 600,000 shares, okay. Or the other way to do it is to divide by 0.5. Do not multiply by 0.5 because you'll get 150,000, which is wrong. I always think the easiest way is to think, well, how much are the shares worth? What's the value of them, the nominal value? How many can we buy for a pound? So that is 2 shares for every pound. So if we multiply the value of the shares of £300,000 by 2, we get 600,000 shares. The company's directors have decided to make a 2 for 5, so that's 2 over 5 times 600,000. So 2/5 of 600,000 is actually going to be 240,000. Okay, so I hope that's helped. Watch out for some more videos on these little Section A questions coming soon. Thanks very much for watching, and don't forget to like and subscribe.